Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, July 3rd. Quick administrative note, there will be no morning call sent out Thursday and Friday, just taking a couple of days off from the morning call. We will resume the morning call on Monday, July 9th. Now, as everybody knows, tomorrow is July 4th. We have a national holiday here in the United States. Other markets will be open. Today is a half a day. Just a quick note to everybody in case you did not know that. Okay, well, let's go into, we're going to roll right into the charts here. Really not much really to talk about. One thing that is concerning is these economic numbers that are coming out. They're really not coming out as stellar as a lot of analysts were thinking and hoping. Yesterday we had June ISM report. It dropped really significantly, 53.5 to 49.7. Now, a figure below 50 shows that we have a slowdown in the economy. Well, this is actually implying that we do have a slowdown now in the economy, and these manufacturing data is really key to the heart of the economy as far as gaining strength and momentum to the upside. However, the markets really didn't care. We did dip on that news, and we sold off pretty much 10 handles on that around the 8:30, quarter 9 in the futures, and then right around I'd say about quarter to 10 or 11, market just started grinding higher again, and you can see that here. This is always a 10-minute chart, 5-10-minute chart. Just like to show everybody where we are, and we pretty much just grinded higher on no volume at all. And you can see from last week to this week, dismal volume. Now, we are holding this big gap up from Friday, as everybody noticed, and that was from the Merkel stating about the commitment to the bailout and whatnot. And this area here, we're going to see the knee's going to need to hold. There's going to be a good gap area, support up in this area, but as you can see here, really nothing going on at all. And I mentioned to a lot of people, and people go, "Oh, you're not doing much." No, I'm not. I like to trade when there's opportunity and where the easy money is made. This here, can you find opportunity? Sure, but there's over 5,000 stocks to look for, and sometimes it just doesn't cross your path. So, I like to keep it nice and tight to the hip. We are in the seasonal tendencies to move higher for the next couple of weeks, and I do think that this market's going to be headed for a nice little retracement. And I'll show you on our indicators. For now, if you long, ride the wave higher. Just make sure you trail your stops, and just kind of forget about it. And if you're day trading, really need to get the right entry. I would just adjust your stops and your position size according to your account, and really just maintain those stops and make sure that if you are in a loss, that you take your loss and move on to the next trade. And that's really what the successful trading is going to be. All right, so 10-minute chart here. Let's take a look at some of the indicators. And one thing I always like to look at is copper. And as you know, Dr. Copper, that's what they call it, because it's a big gauge in the economy. And I did mention last week that we had a really low double bottom in this area. And here's our ratio chart from copper to the S&P, and you can see copper falls, S&P is going to fall. Now, we did have that big spike up on Friday, and sure enough, all the other commodities did follow suit as well. I've been talking about oil, some coal stocks, some energy names. They all did well. Fertilizers did phenomenal. Soil, if you remember soil, but again, on very low volume. So that really is to be tested. And we are at the 50-day moving average on a daily chart here in copper. So something that we're going to keep an eye on now. I wouldn't mind this copper retracing back in this 340 area and then breaking out here. A lot of overhead resistance, 50-day, 200-day moving average. So that's something that we really need to keep an eye on. And as you can see, stochastics are not even oversold. So there is room to the upside, guys. And I do see that the market can actually follow suit here. Take a look at U.S. dollar. Okay, now the U.S. dollar, we did get a big engulfing candle here. Now the U.S. dollar, which I drew this over a week ago, had a bull flag pattern. Now, we did break out of that bull flag and just about tested the highs, give or take 20, 30 cents. And on Friday, we did sell off. Now, we did retrace a little bit higher. Wouldn't want to see this go past 50% of this candle, and I'd like to see this roll again. If we could take this area out here, this 81.50, I see that there's further upside in commodities and stocks. No question about it. If we start to break higher again and we take out this 83 area here, I think the market's going to be in big trouble. And right now we're in the middle of range. We have an inside day, this engulfing candle. So really no news. Usually typical pattern, bear flag into this area, another 2 or 3 candles, and then fail. And we break this low here of this bull flag, or we break the high. It's either one way or the other. We break lower, market goes higher. We break higher, market goes lower. Bottom line. Now, trusty McClellan oscillator. Double top here, very concerning to me. If you're swing trading, I would be tightening your stops. This is a very trusty indicator telling me that we are in overbought territory, nosebleeds. So be cautious here. I don't think anything would happen today, but I do expect Thursday and Friday. There's a lot of data coming out Thursday. We have our usual initial jobless claims, and then we have the first of the month. We have non-farm payrolls, which is always a huge, huge number, and a lot of people will be looking at that. Now, the problem with that is everybody will be off. All the big players will be off. So I think the move, whatever happens on Friday, is going to be more dramatic than usual. Okay, so keep an eye on that. And maybe, if that ISM number is good or bad, let the market digest for the first 15, 16, first 15, 20 minutes or so, and then really react to it if at all. Okay, let's take a look at the bullish percent, and I like to see these charts, and I like to show you these because it's really good gauge. You see how we took that area out up in here? Now we just need a little more follow through, but we are getting in a really an overbought territory here already from this move up. So want to see this thing go up a little higher, maybe a little pullback to this area again, back down to this average, this momentum moving average, and then higher. And that's what I'd like to see, along with all of the other barometers that we follow. Now, stocks above the 50-day moving average. Again, nosebleed territory again. See, we're way back up into this area here, guys. Caution is warranted. And if you're day trading, just position your size accordingly and just make sure you manage your stops accordingly as well, okay? Very, very good indicator as well. And all these indicators complement the McClellan oscillator. All right, let's take a look at some of the charts here, guys. Really not much going on, but if you look at the 60-minute, I had this, I think a little over about a week and a half ago. Inverted head and shoulders, left shoulder, head, right shoulder. And then we actually came back, and I said I didn't want to go past the right shoulder. Sure enough, we stayed there. We tested it again, and that we broke out. Measured move in this thing's going to be 138.78. It's the Spider 60-minute. As you can see, below average volume. But we're almost there. Another point and a half, and this move will hit. So good barometer. Now, remember, we do have, we do have larger time frames with big bearish patterns. So that's something to consider. Again, not triggered, but just keep that in the back of the mind right now. But we'll play the short-term patterns as we see it, okay? Now, here, transportation sector, IYT ETF. I'd love to see that these are the leaders. Transports, the Russell. Good barometer of the economy, gauging risk is the Russell as well. Big hook, like I mentioned. We have a hook up here now. Now, we're not overboard anymore. This can actually move extremely higher and test the highs here, 94, 96, and we're not even above the Bollinger Band here on the daily chart. We're above all of the averages, very, very bullish, consolidated, we actually dipped lower and broke up higher. This is a very bullish case from yesterday. So the bulls definitely in their corner right now with the transportation sector. Look at the Russell. Russell taking off. Now Russell's a little bit overboard because we're actually into the overextended in the Bollinger Bands. Our stochastics are not, though, and our MACDs are actually just fine. No volume, though. So it's just something really to be concerning about. However, chart looks healthy. There's nothing wrong with the chart. So everything's pointing higher for the intermediate term and the short term. Again, MACDs rolled over higher low from this previous low. We broke out. We're above the 20, 50, and 200 day and consolidated here on low volume. Consolidation, I would expect it is a holiday week, so I wouldn't read too much into it, but what I didn't like is last week's volume was just so dismal. Is something really to consider. Okay? Really, guys, that's about it. Really not much going on. I want to wish everybody, family, happy 4th, happy and safe 4th of July, and we will be back to broadcast morning call videos on Monday. Again, enjoy the long weekend, and I hope a lot of people are taking off, getting away from the screens. Take care and have a great day, everybody.